Very good morning, everyone. Hope you all must be doing great. And I'm so happy to see that most of the students are sending their daily homework. Please keep on doing this for this total of 10 days. And you will feel very, very comfortable in income tax then. Keep sending the homework, everybody. Okay, let's start with the day 3 for our workout batch. And today we'll be doing an important topic, that is PGBP, profits and gains from business and profession. First of all, I start this topic. We should know the differences between optional regime and default regime. In fact, in most of the chapters, I'll be telling you first that what is the difference between default and optional, so that whenever we have a question of total income, where they would be asking us to compute our total income as under both the regimes, so we should know the differences. What should be the differences? Everyone, please write with me. If we talk about PGBP, there are only three differences. There are only three differences in default versus optional regime. Otherwise, everything is same. And these differences are also quite significant also and important also. And it's not that you will forget it, because it is quite, I can say that these are very indicative. So there is no problem as such. So there are three differences. One is, everybody with me. So under optional regime and default regime, one is section 32. See, in section 32, normal depreciation is allowed under both the regimes. So if I talk about normal depreciation, it is allowed here as well, it is allowed here as well. But if I talk about additional depreciation, and we all know what is an additional depreciation. Additional depreciation, we understand this additional depreciation is allowed only and only to manufacturing assessee, it is allowed only on new plant and machinery that is installed in factory. You should know about it. That additional depreciation is allowed only to manufacturing concern, new plant and machinery that is installed in factory. And how much is the additional depreciation? 20% of cost. Or sometimes 10% plus 10% also. If the asset is put to use for less than 180 days, 10% in the first year and 10% in the second year. I believe everybody is able to recall additional depreciation. So this additional depreciation is allowed under optional regime, but it is not allowed under default regime. In default regime, we cannot take additional depreciation. So this is the first difference. There are three differences overall. The second difference is section 35, scientific research. Under scientific research, we have two types of deduction. One is in-house research and second is outside research. So one is called in-house research. In-house research means what we are doing for our own business. This is the expenses. These are the expenses which we are doing in our own business. It could be revenue, it could be capital, both. In-house research is allowed under both the regimes. You can take it in optional as well in default. There is also known as outside research. And you understand that outside research is actually not necessary for your own business, but it is a kind of donation. It's a kind of contribution which we give to IIT, national laboratories, or other approved institutions. This is called outside research. Outside research is a kind of donations, or it's a kind of contribution which we give to others. like IIT, National Laboratory, or any approved institutions. So this is allowed under optional regime, but not in default regime. This is allowed in optional regime, but not in default regime. So this is the second difference. Outside research is the second difference. In-house research is allowed in both, but outside research is allowed only and only in optional regime. And the last difference in PGBP, there are only 3 differences in PGBP. And the last difference in PGBP is section 35 AD, which is called specified business. Which is called specified business. Specified business is the 14 businesses which we have. I will be discussing more on this specified business today. So 14 businesses where we get 100% deduction on capital expenditure, except land, goodwill, and financial instruments. We get 100% reduction. I'll be talking more about this today. So here also it is not for default regime. We'll not get in default, but we'll get in optional. So these are the 3 differences which you should know. I'll be discussing them, don't worry. These are the 3 differences. Additional depreciation, outside research, and 35 AD. Businesses. We don't get in default, but we are allowed to take them in optional regime. Guys, let me know if you have copied it. Very good. Very nice. Let us start with question number 1, and I'll be discussing more concepts of PGBP with the questions. This file is uploaded on the Google Drive. So after the class, you can download this. Look at the question. It says, Mrs. Moksha Enterprises, a sole proprietorship. So it's an individual business. Sole proprietorship is an individual business. Owns 4 machines put in use for business in March 2023. So he has having 4 machines and he has put to use in March 2023. March 23 means in previous year 22-23 he must have put it. Our previous year is previous year 24-25. So he has put this machine some years back. The depreciation on these machines is charged at 15%. And we all know that if the rate of depreciation is not given on building, it is 10%. For machines, it is general rate is 15%. Everybody understand now? On plant and machinery, if even the rate is not given, we always claim general rate 15%. Although we have some machines of 30 and 40 also, but 20 also ships, etc. But generally 15% on plant and machinery, and on building it is 10%. Correct? General rate for building is 10%. Although we have building 5% for residential, 40% for temporary, but general is 10 on building. Although they have given, but still if they would not have given, I would have taken 15%, 15. Okay. The written down value of these machines as on 1st April 2024 was 7,70,000. This is the written down value as on 1st April. This. Okay. Let us see what they are actually asking us to compute. They are asking us determine the claim of depreciation for the assessment year, compute the capital gain, if any, if Moksha Enterprises, third point is something. Okay. So mostly this question is related to depreciation. They are telling us that what should be the depreciation. And they are also telling us to compute the capital gain. Although capital gain will be doing tomorrow, but it is related to section 32. let's say if he has sold any of the machines, so there might be chances of capital gain. There might be chances of capital gain. I'll be explaining this. Okay, so we understood that the opening value of the machine was 7,70,000. Two of the old machines were sold on 15 July 2024 for 10 lakh. So we have sold some old machines for 10 lakh. A second-hand plant was bought for 6,10,000. On 30th December, you are required to compute the depreciation. Okay. And they are not saying as per default or as per optional. So whenever the question is silent, we always took it as default. Otherwise, in depreciation, there is only one point, that is additional depreciation, which is different. And guys, additional depreciation, please see, it's not like that. Some students ask me that, sir, every time in optional regime have to apply additional depreciation. See, additional depreciation has its own conditions also, right? So it's not like that whenever the question is of optional regime, we will be applying additional depreciation. No. It is actually when they are actually saying that this assesses a manufacturing concern, the plant and machinery is new, it is installed in factory. So this should also be indicative in your question. So here nowhere it is written that Moksha Enterprises is a manufacturing concern. It's not written anywhere. So even if I would follow optional, I will not apply additional depreciation. Why? Because it's nowhere written that it's a manufacturing. See, it could have been written like manufacturing or industrial. Industrial is also, industrial is also manufacturing, right? So either manufacturing or industrial. Mainly you will get manufacturing. So there should be some words that this person is a manufacturing assessee. Second, there should be thing like he has purchased plant and machinery, and it should be indicative that it should be used in factory. So otherwise, if it's not there, so we can make an assumption out of there that, okay, it is used in factory. So that is the reason if manufacturing is given. So your conditions of additional depreciation should be satisfied. Then only additional depreciation would be charged. Otherwise, please don't charge any additional depreciation like that in any of the cases. Right? And here nothing is mentioned. And even he has purchased the plant and machinery, even they are saying second hand. So second hand is indicative that there would be no additional depreciation. Right? So don't worry about it. Normally calculate. So two of the old machines were sold for 10 lakh. A second hand machine was bought on 30th December. You are required to compute the depreciation. Normal question of depreciation. Okay, with me. Everyone, write with me. Solution number 1. We are computing depreciation. First part was asking us to compute the depreciation. So this is the first part. Computation of depreciation. This is plant and machinery, 15% block. How do we compute depreciation? So we have a fixed format. See, if they are giving us that this is the opening value, this is the addition, this is the subtraction, or we have sold it. So we have to make a format. Otherwise, guys, depreciation might be these type of question you can get separately. Might be that in your total income question, you have to calculate depreciation. And in fact, total income question, the computation of depreciation is very, very easy. They are saying that this is the opening value. That's it. You have to compute the depreciation. There is no addition. There is no sale during the year. So don't make this format. Don't make this format, right? So there you have to do it quickly. So directly you can do it. So if there is no additions during the year, there is no money received on sale. So unnecessarily don't make this format, which I am making right now. Since this question is specifically for depreciation, opening value is given, additions during the year is given, and sale also during the year is given. So we have to make this format, correct? So it should be like, the format is simple. You always start with opening value of the block or opening WDV of the block. Opening WDV of the block means that if you are doing for previous year 24-25, so what was the value on 1st April 24, the first day of the previous year? First day of the previous year, what was the value? Then you should like add additions during the year. Guys, even in this question, you will notice that this person has sold the machines in July 24 and he's purchasing it later in December. So should I write sale first and addition purchase afterwards? No. This is the fixed format. First of all, you should write additions during the year, right? So please don't go date wise. First, you should write additions during the year only. See, we are computing depreciation at the end of the year. So anyways, all these dates have already been expired. So we know that during the year, how much we have sold, how much we have acquired. So please, the format would be the same. Even if you have acquired it at a later date, doesn't matter. First of all, write additions during the year. Less. Money received on sale or disposal. The format is simple. First of all, the opening value plus additions less money received on sale or disposal. So the opening value of the assets were 7,70,000 in the beginning. Additions during the year was 6,10,000. Sale is for 10 lakh. Okay, 770. 7,70,000 was the opening value. Additions during the year was 6,10,000. And money received on sale or disposal is 10 lakh. So this is add, and this is less. That is the reason I have shown this in bracket. Simple. Opening value plus additions during the year minus money received on sale. Guys, they are saying two of the old machines were sold. Two of the old machines were sold. Okay, the old machine must be from here. Got it? First of all, understand whether the entire block is sold or part of the block is sold. Here, part of the block is sold. Only few assets are sold from this block, right? So still the block is existing. So how we'll do it? 770 plus 6,10,000 minus 10 lakh. $3,80,000. Correct, Deepa, Aditya, thank you. So this is 3,80,000. Correct. So this is called WDV at the end for charging depreciation. Now we'll charge depreciation on 3,80,000 rupees. Why? This is the part of the block which is still remaining and we can charge depreciation. So how you charge depreciation? The first thing which you should consider is ask yourself a question that whether it contains any asset which is acquired during the year. The answer is yes. It contains 6,10,000 which is acquired during the year. Does it contain that machine or not? The answer is yes. Because this block physically, just physically think that some of the old machines were disposed of. Some old machines were sold. So still the asset which is acquired during the year, it is actually is there. Okay. So how much it is for? It is for 6,10,000. So please split this, whatever is the new one. So the new one is 6,10,000. But the problem is we cannot take out 6,10,000 from here because the figure is 380 only. The figure is 380 only. So generally what you should do, whatever is the new, please take it out first, and whatever is the remaining, you should keep it. Right. So let's say this would have been, for example, you don't write it. Let's say this would have been, the sale during the year would have been 5 lakh. Let's say the sale would have been 5 lakh. So what you would have done is 770 opening value plus 6,10,000 minus 5 lakh. So this is giving you somewhere about 8,80,000. Correct? Don't write this. Correct, Deepa. 880. This would have given you 880. So you should have asked a question from yourself that whether this 880 or not generally 880, whether this WDV at the end contains any asset which is acquired during the year. The answer comes here, 6,10,000. So what you should have done is, you should have taken 6,10,000 first out from it, split this into two parts, 6,10,000 first part, and whatever is the remaining part, balancing figure, guys, you have to charge depreciation on 880 only, correct? On 880 only, you have to charge depreciation in that case. So the balancing figure is, correct, Deepa, 2,70,000. So you should charge depreciation on this amount and this amount. Some students make a mistake that they charge depreciation on this amount as well as this amount. No. Please never charge. I see that there are, when I take tests, there are still students who charge depreciation on this amount also. No, never. See, you have to charge depreciation on whatever is the figure which you are left with. So you are left with 880 only. So depreciation should only be charged on 880. So how it should be charged? First, you should ask whether it contains any asset which is acquired during the year. The answer is yes. Second, you should ask, so how much it is? 6,10,000. Split this 610, whatever is the balancing figure. So on this 6,10,000, you have to, then the second question, whether this asset which is acquired during the year, whether it is put to use or not. See, if it is never put to use, if it is given in the question, see, if it is given in the question that it is never put to use, then the depreciation would not be there, 0 on this. And on the remaining, there is no problem. Remaining, there is a full depreciation. Full means 15%, half means 7.5 in this case. Got it? If the question is specifically telling you that this asset is never put to use, so please don't charge depreciation on 610, only charge depreciation on 270. 270 is the old one, full depreciation. However, if it is given that it is put to use, but less than 180 days, then you should charge it on, like less than 180 days. But so less than 180 days would be from 4th October. If anything which is put to use on 4th October or thereafter, that is less than 180 days. If you will count from 3rd October, you will get exactly 180. So please make sure to remember this date. 3rd October, you will get exactly 180. 4th October, you will get 179. 4th October and onwards, half depreciation, right? Okay. So in that case, if it is used, then, but used for less than 180 days, half. If it is more than 180 or more, then full. Correct? If it is given in the question that this asset is purchased on this date, and there is no information regarding the use date. So generally, assumption is whenever you purchase, you use on the same date, right? So please remember, if it is specifically mentioned that it is never put to use, then don't charge depreciation. But if it is nothing like mentioned like this, only the purchase date is given, use date is not given. So purchase date and use date is equal, same. I believe that you got it. Now, so on 880, 6,10,000, whatever is the depreciation, let's see when this asset is purchased, 30th December 24. I have given you the date, 4th October. If it is 4th October or onwards, half depreciation. 30th September. So this is, 30th December. So it would be half depreciation. So in that case, on 6,10,000, half means 7.5%. And on this, it is 15%. Correct? This is the depreciation. Now, coming back, since our question is not that they have sold it for 5 lakh, our question is that we have sold it for 10 lakh. In that case, we are left with 380. Now, again, you have to ask this. This is the WDV at the end. See, if there is no block exist, if everything is sold, then we can't charge depreciation. It would be capital gain or capital loss. So in this case, so if it is 380, still the block is remaining. So you have to ask whether it contains new asset. The answer is yes, sir, it contains new asset. How much it is for 6,10,000? Take 6,10,000 out from him, but you will not be able to take it out. Why? Because the figure is 380 only. So whatever is there, whatever you can take it out, take it out. So 680 we would like to take it out, but we can't take 680. So we can take only 380. And what is the balancing figure? 0. So the balancing figure is 0. Now, in this case, ask this. Whether this new asset is put to use, the answer is they have given that this is purchased on 6,10,000 on this date. They have not given the date of put to use. So we'll assume that the purchase date is equal to put to use date. So it is used, correct? And which is half. So on 380, we will charge half depreciation, 7.5%, and 0 will not charge depreciation. So depreciation for this year would be 3,80,000 into 7.5%, 28,500. Thank you, Pradeepa. Deepa, very good. 28,500. So we'll charge depreciation. Is there any capital gain or capital loss? No, there is no capital gain or capital loss. This is a depreciation. So they are asking us determine the claim of depreciation for this year. So we have done 28,500. Compute the capital gain liable to take. So in this case, there is no capital gain. Why? Because still my block is existing and we have the value, we'll charge depreciation. Capital gain would be there if there is any surplus. If there is any surplus or if the entire block is sold, then the capital gain would be there. So I'll be taking this in the second portion of this. So this is the capital gain would be nil. There is no capital gains. There is no capital gain. However, they are asking us the third point. If Moksha Enterprises has sold the two machines in July 24 for 15 lakh, explain, will there be any difference in your above working? Let's say, if this would have been sold for 15 lakh, if this would have been sold for 15 lakh, so opening value, I'm writing it over here. The opening value is 7,70,000. Acquisition during the year is 6,10,000. And two old machines were sold. And two old machines were sold for 15 lakh. So what does it mean? 770 plus 6,10,000. So it is 13,80,000. 13,80,000 is the value of the block. But we have sold it for 15 lakh. We have sold it for 15 lakh. In fact, there is a surplus. Right? You can't claim any depreciation here. Why? Although part of the block is sold, only two assets are sold. But why can't you claim any depreciation? Because there is no problem on the pocket of the assessee. Assessee, whatever he has spent, the amount he has fully recovered it. So he has spent 770 was the opening value, 6,10,000 he has purchased. Total in this year, if you will see, 13,80,000 he has spent. But 15 lakh he has recovered. So why we will give him deduction? No depreciation here. So here, the WDV at the end would be nil. Although the block is existing physically, but we can't claim depreciation. Why? What is depreciation? Depreciation is a expense which is allowed to the assessee. Why? Because he has actually spent something. But in this case, if you have not spent anything, then why we will be taking it? So it would be nil. So depreciation would be nil in this case. And since you have recovered something more, whatever the amount you have paid, you have recovered it. So it is 1,20,000 is the capital gain. And on depreciable assets, it is always short-term capital gain that I'll be explaining it tomorrow also. It is a short-term capital gain. Every time on depreciable assets, it is section 50 would be there of capital gain, always short-term capital gain 120. Have you all understood this? Please let me know if you have already completed this. Good. Very good. Let us come to question number 2. It says, Arjun is carrying a business and during the previous year 24-25, the profit and loss account has a net profit of 7,85,000. The following expenses debited to P&L account. So he has a profit of 7,85,000 net profit. His P&L account is showing this and his profit and loss is debited with this. Municipal taxes for the shop 7,000. Depreciation as per books 34,000. Okay. So you don't have to make it. Just look at it. So actually, in your exam, you don't have to make any P&L account. Just for understanding, I'm making it. So this is a P&L account. and it is showing a net profit of 7,85,000. It is showing a net profit of 7,85,000. Okay. And what is debited? 7,000 is debited over here. 34,000 is also debited over here. What is 34,000? 34,000 is depreciation. And 7,000 is municipal taxes for the shop. Municipal taxes for the shop means municipal taxes of the business. So municipal taxes. Okay. Now, we understand that municipal taxes of the building is an allowable expense. Municipal taxes of the building is an allowable expense, and it is allowed under section 3030. Even if you don't remember the section number, that's okay. So if there is municipal taxes of your any of the building which you are paying for your business, it is an allowable expense. But it is subject to 43B. What is 43B? In 43B, we have 7 expenses that are allowed only on actual payment. I'll be telling about 43B also today. So 43B contains some expenses which are allowed on actual payment. These expenses should be paid up to the due date of ROI. Agree? Everybody know about 43B? If somebody doesn't know, please tell me. There are certain expenses which are allowed only on actual payment. If you have actually paid them during the year or up to the due date of ROI, we allow them. Otherwise, we don't allow them. And municipal taxes is one of them. Any taxes payable to government is subject to 43B. Everybody, please write it. Write in short. Section 43B. Expenses allowed on actual payment. There are certain expenses. See, generally all the expenses are allowed as per due basis only. If the assessee is maintaining his books of accounts on mercantile basis, due basis, then all expenses are allowed on due basis. So there could be thousands of expenses. They all are allowed on due basis except these 7 expenses. So 7 expenses are there. So there are 7 expenses which are allowed only if they are paid. If they are not paid, they will not be allowed. First is any type of taxes. Any type of taxes. So any type of taxes, municipal taxes is one of them. So it is allowed if it is actually paid. If it is not paid, it will not be allowed. Second is bonus or commission to employee. Third is interest on bank loan or financial institutions loan. Not any other loan. If you have taken the loan from the bank or financial institution, then it is subject to 43B. It is allowed only if it is paid in PGBP. See, yesterday in house property, I told you that even if you have taken a loan from bank, in house property, it is allowed on due basis. But in PGBP, it is allowed if you have taken it from bank or financial institution, it is allowed only if it is paid during the year or up to the due date of ROI. Fourth, employer contribution to recognized provident fund or other employees fund, other funds, mainly RPF. Fifth is leave salary. If you pay leave salary to your employees. Leave salary is for what? If the assessee has not availed the leave, if the employee has not availed the leaves, so we are paying him extra amount as a leave salary. So that leave salary is allowed, but not on due basis. It is allowed only on actual payment, whenever you have made an actual payment. Sixth is whenever you pay to Indian Railways. So payment to Indian Railways, not that important, will not come in your examination. So this is actually allowed on actual payment. So these 6 expenses should be paid even up to the due date of ROI, we are okay with it. Either they are paid during the year, very good. Even if they are paid after the year is over, but in fact, up to the due date of ROI, 31st July or 31st October, we'll assume that it is equal to payment during the year. So we will allow them. There is seventh expense, that is MSME. Payment to MSME, I'll be explaining this also today. Payment to MSME, it has a special own provision. It has a special provision. I'll be discussing them. It has a special provision. It is not up to the due date of ROI. It has its own date. So these are the 7 expenses. 6 in one category and last one is in other category. Let me know if you have done this. Very good. Very good. So remember, see, if the assessee is following cash basis, and guys, very, very rare chances that you will get a question that the assessee is following cash basis. Still, if the question is specifically telling you that assessee is following cash basis, then all the expenses are allowed on cash basis only, right? Then there is no problem. On payment basis only we'll allow. But if the assessee is following mercantile system, or nothing is mentioned in the question is silent, we always assume that the assessee follows mercantile system. Agree? So in that case, allow all the expenses on due basis. Even if it is not paid, allowed on due basis, except these 7. Except these 7. These 7 expenses are allowed only if it is actually paid. Even during the year or even after the year. Let's say 31st March 25 is the last date of the year. Even they are paid after the year, but up to the due date of ROI. So we'll assume that it is paid during the year only. We'll allow in this year, but even if it is not paid during the year, during the up to the due date of ROI, we will not allow it. So any type of taxes. So municipal taxes was one of them. So municipal taxes is any type of taxes. So it should be allowed only if it is actually paid. And they are saying municipal taxes for 2 half years. Okay, it is for 2 half years, means 6 months, 6 months. 6 months, 6 months means 3,500, 3,500. It is for 2 half years. It is just the way of saying it. 2 half years means 6 months, 6 months. Now, payment for 1 half is made on 12/7/2025, 12th July 25, and the other is made on 31st of December 25. See, our year will end on 31st March 25. Correct? Our year will end on 31st March 25. Even if you pay up to the due date of ROI, let's say it's not given, for example. Is it given? Okay. The due date of ROI is also given, 31st October. The due date of ROI is 31st October. So if something is paid before 31st October 25, it is allowed. If it is not paid up till 31st October, it is not allowed. So in this case, first half is paid before 31st October and the other half is paid on 31st December 25. So it means that out of this 7,000, 3,500 is okay. The remaining 3,500 is not paid up to the due date of ROI. That was disallowed. Okay. Depreciation for the year is, depreciation as per P&L account is this. Guys, in your total income question also, please remember, in your total income question also, if there is some depreciation which is debited, and in the remaining question, there is no such information regarding anything about depreciation, then please assume that this depreciation is correct. This depreciation is as per 32 only, as per income tax only. I'm again repeating. If in your examination, there is any depreciation which is debited, and after that, there is no other information related to depreciation, then please assume that this depreciation is as per Income Tax Act only, correct. No problem with it. However, if any other information is provided to you regarding this depreciation, then you have to follow that information and this depreciation will not be allowed. Correct. So they are saying information. The WDV of the assets used in the above business are as under computer 240, computer printer 150. See, indirectly they are giving you the WDV of the asset. So indirectly they are telling you that please compute the depreciation accordingly. So we have to compute the depreciation. So this is the depreciation which is not correct, and we'll be computing it from here. The following income are also credited in the P&L account. The following income are also credited in the P&L account. So they are sitting in my P&L account also. Okay, just see which one. A and B. Two income are also in my P&L account. He has received a rent of 1 lakh on let out property. So he has received a rent of 1 lakh. So I'm writing it here. By rent received of let out property is 1 lakh. It is credited in his P&L account. And next is Arjun is also a partner in a partnership firm. He is also a partner in a partnership firm and received a salary of 2 lakh, and it is credited in the P&L account. So he has received a salary from partnership firm 2 lakh rupees. 2 lakh. Correct? He is saying in the second point, they are saying the following income are also credited. In the second point, there are 2 points, A and B. So these points are also credited over there. And third point, is the third point credited? No, third point is a separate point. Third point says non-competing fees of 1.5 lakh is received. Okay, we'll see about it. And the due date of ROI is this. Okay, the question is done. First of all, tell me, have you understood this P&L account which I have made? This is actually not something extra. I have made it from the information which is given in the question. Everybody is okay with this? First of all, tell me. The P&L account we have made. Guys, in your examination, you don't have to make P&L account. I have made it just for your understanding. Okay. So guys, in this question, we have a P&L account, and if you will see, this is the net profit. There are certain expenses which are debited. There are certain income which is credited. And there is some other information also. Some other information is also given in point number 3. And in point number 1 also, some other information is given. Guys, I'm telling you that this is the base of PGBP. This is the base of total income question. This is how we'll get it. This is how we get it. Even if you will follow the, if you will solve the total income questions also, you have to follow the same procedure. Same procedure. Right now, this question is quite miniature. But after 2, 3, 4 days, when you will be coming to total income question, you will see that this base will only help you. How do you compute your PGBP? I'm not talking about any other income. How we should compute our PGBP? PGBP should be computed in 4 easy steps. The entire PGBP, whether it's a small question of PGBP, whether it is a big question of PGBP, the procedure is same. 4 steps. The step number 1 is start with the net profit. Whatever the profit which the question is saying to us, please start with this profit. You have to take this as a starting point, and you have to keep on adjusting this profit. Keep on adjusting this profit. Some addition, some subtractions. That's it. Plus, minus. We have to adjust this profit only. So this is our starting point. This is the base. So this is the base. Step number 1, net profit as a P&L account. Then you have to see expenses. The second step should be, this is the second step. The second step should be our expenses side. We have to see that whether all the expenses which are debited, are we okay with that? Are we completely satisfied with those expenses that yes, they are correct expenses, or they are not correct? In case they are correct, then we have no issues. If any expenses which is there, which we are okay with it, then no problem. It is correctly debited. It is correctly debited. We don't have to do anything. But if there is any expense which is not correct, so please disallow that. And you know that if the expenses is disallowed, the profit will increase. So you have to add back. We call it add back, or we call it disallow. Disallow these expenses. So your second step should be, don't look at any other thing. Don't look at any other thing. Just look at, go one by one. First step, net profit as a P&L account. Write with me. This also. How do you compute your PGBP? Actually, what I'm telling you is actually section 29, but forget about section number. Computation of PGBP. how you should compute your PGBP. And guys, I'm giving you a thumb rule. Whenever you are computing your PGBP, your target should be just PGBP. If you find any other things, don't worry about them. Your target should be, your eyes should see anything which is PGBP only. Computation of PGBP. There are 4 steps to it. The first step should be step number 1. Even you don't have to write this step number 1 or 2, 3. So as of now, you can write it, but in your examination, don't need to mention this. Step 1, step 2, step 3. Directly write this. Step number 1, start with the net profit. Keep on writing with me. Net profit as per P&L account. Whatever is the net profit, write it. In case, although you will not get, in case it is a loss, then also start with the same thing. Just write bracket over here. Correct? Although you will not get it, but still if it is a loss, so start with the P&L account, write in negative, that's it. Then step number 2 should be your expenses side. Look at your expenses side. Look at your expenses side. And if there is any expense which is to be disallowed, add back. Add it. Add expenses which are debited, expense side. Look at your expense side, and whatever expense which you think is not allowed, cut it and add it. Your profit will be adjusted. Your profit will increase with this disallowed expenses. I believe everybody is clear on this. Then once you have checked each and every expense, check each and every expense. Once everything is done, if you check the first expense, if you are okay, then go to the second expense. If you are okay, go to the third expense. Third expense, you didn't find it correct, disallow it, add back. Fourth, okay. Fifth, okay. Sixth, no, disallow it, add back. Once your expenses side is done, all expenses are done, come to the third step, P&L account credit side. Come to the third step and just see in your income side, very important guys, just see that any income which is PGBP income, any income which is PGBP. What is PGBP? Either section 28 or 41. 28 is charging section of PGBP. 41 is deemed PGBP. I'll be telling you about this. So if you find any PGBP income, you are okay with it. You are okay with it. But if you find any income which is not PGBP, just delete it. Guys, if I delete it because it is wrongly sitting in my P&L account, what I'm deleting my income. So if I'm deleting my income, my profit will reduce. Agree? So you should only concern with that income which is PGBP. Anything which is not PGBP. What is not PGBP? Let's say it belongs to some other head. It might happen that it belongs to some other head. That is not PGBP. Either it is house property, either it is salary, it is capital gain or IFOS. Or might be possible that that is an exempt income. It might be possible that is an exempt income. That is also not PGBP, right? So any time when you find your other head's income, delete it. Or you find your exempt income, deleted from here because that is not PGBP. You are only and only concerned with your PGBP income. So anything which is credited over here, if it is PGBP, we are okay with it. But if it is not PGBP, we are not okay with it. So if you will delete it, what you will say? Less. Because your profit will reduce. So step 3 would be less income credited to P&L, but not PGBP. It was not PGBP. Then what it was? It was actually, it could be your other head income, or it could be exempt income. So please delete that. Your income would be reduced. Guys, first it has 4 steps. First 3 steps should only and only look at your P&L account. That's it. Your first three steps should be P&L account. And then the fourth step should be your information. What is given in the information, do it accordingly. Step number 4. You can add also, you can less also. It depends upon the information. Other information. You can add also, you can subtract also. It depends. And this is what your PGBP is. This is what your PGBP is. Have you done this? Good. Now let us solve this question with the help of this R computation also. Okay. Now, Arjun is carrying on the business. What are we supposed to compute? Compute the total income of Arjun. Okay, we need to compute the total income of Arjun. Solution number 2. Computation of total income of Arjun. Guys, if nothing is mentioned, always follow a default regime, right? If nothing is mentioned, we follow default. Assessment year 25-26, default regime. So in this question, they are asking us to compute the total income. Total income. Is it PGBP or the total income? Total income. Now, whenever there is a question of total income, always try to use the elimination pattern. See, we have 5 heads: salary, house property, PGBP, capital gain, IFOS. Right? So always try to use that which income I don't have in this question. So the question which we have read so far, what do you think? Is there any salary income given or not? Just do elimination. I'll be telling you many times in the total income classes also that always use elimination. So do you think that there is any salary income in this question? No. Is he working anywhere? Is an employer? No. Is there any house property income? What do you think? Was there the question which you have read so far? What do you think that is there any house property income? Yes. You have seen that there is a rent which is coming, 1 lakh rupees or so. So house property income was there. PGBP income, of course, it is there. Capital gain, I don't find any capital gain. I don't find any IFOS also. So there is house property income and PGBP. So always do a elimination round. So we have house property income and PGBP. So computation of total income. And there is no hard and fast rule that you should start with house property only. No, it's not. There is no hard and fast rule that you should start with your salary, house property, PGBP, capital gain, IFOS in this order. No. If you want to keep your capital gain first, if you want to keep your PGBP first, no problem. You can do it. No issues. You can do it. But right now I'm computing my house property first. House property income. Okay. First of all, regarding house property, I find only one thing. The following income are credited and there is a rent of 1 lakh rupees. Guys, see what they have written. They have written rent or they have written house property income. They have written rent. It means that it is not computed. We have to compute it. So I have told you earlier also, when rent is written and expected rent is not given, which will not be given in most of the cases. So please take it as your GAV. Correct? Take it as your GAV. So this is our GAV. Actual rent is our GAV. Municipal taxes paid. Okay. So GAV is 1 lakh. minus municipal taxes paid. Municipal taxes of what? Municipal taxes of this let out property. Municipal taxes of let out property. Municipal taxes paid only on payment basis. Were there any municipal taxes? Yes, there were municipal taxes. But actually, I think that these municipal taxes which were given, it is for the shop. Right? So it is indicating that this municipal taxes of 7,000 rupees, it is for the purpose of business building. The building which we are using for business purpose, that is shop. Is it written anywhere that this municipal taxes are for the let out property? No. Understood? If this municipal taxes would have been a let out property, I would have subtracted it from here. But I don't think that I have been provided with the municipal taxes of this let out property. So my NAV would be 1 lakh. Have you understood this or not? Any confusion on the municipal taxes? Any confusion on the municipal taxes, guys? Understood now? Very good. Because it is specifically given that municipal taxes are for the shop. So it is not for the let out property. So municipal taxes would be 0, NAV nil. And then we know that there are two deductions. One is standard deduction and second is our 24B interest on loan. So interest on loan is not given on this property. So minus standard deduction, 30% of NAV, 30,000 rupees. And since our house property income will become 70,000. Correct, Deepak. Very good. Everyone, good. Now, let us start with PGBP. So it's a small question. I'm not making any working note. It's a small question. I'm not making any working note. Otherwise, if this were a total income question, generally we make a working note for PGBP that you will understand from day 7 onwards. So PGBP. What should be my starting point? Right. Please follow these steps. Please follow these steps. The starting point should be net profit as per P&L. Go step by step. Go slowly, step by step. Net profit as per P&L account. So your net profit as per P&L account was 7,85,000. Step number 1. Step number 2. Add the expenses which are not allowed. So let us see the expenses which are debited to the P&L account. The expenses which are debited to the P&L account. So this will actually help us. Municipal taxes. Whether municipal taxes is for the business, yes. They should be allowed. They should be allowed. But subject to 43B if it is paid during the previous year. So we understood, or up to the due date of ROI. So we have already read that half of them is paid up to the due date of ROI, but remaining half is not paid. So out of this, 3,500 will not be allowed. Correct, Kishore? So in this case, we will add. How we'll write in examination? We'll not write a story over here. No, maximum 2, 3, 4 words. That's it. Maximum 2, 3, 4 words. Simple. We have to just intimate to the examiner. Guys, whatever the presentation we are doing in classes, what I'm telling you to do in homework, this is our examination presentation, right? This is how you have to do an examination also. Add municipal taxes paid. Municipal taxes not paid, sorry. Not paid. Guys, if you don't remember the section number, no need to write it. If you don't remember the section number, no need to write it. Although right now I'm writing it for your understanding, but in examination number, no requirement of writing the section number. You will not get extra marks for that. But yes, if you write wrong section number, it will be deducted. Under section 43B, 3,500 I will add back. Now, second is depreciation. Guys, if nothing is mentioned in depreciation, then I will say this is the correct depreciation. But I think that now we have something which is mentioned regarding depreciation. So it means that this is not a correct depreciation. So I'll add back this depreciation. Depreciation as per books, 34,000. Correct? See, we are doing it slowly and steadily. Our step number 2 is done. We have to look at all the expenses side. Then we have to look at the income side. What is there given in the income side? If it is PGBP, we are okay. If it is not PGBP, we are not okay. So first is rent. First is rent is given. Is it a PGBP? No, it's not a PGBP. It's a house property income. So what I'll do, I'll delete this amount. Should I delete 70,000 or I should delete 1 lakh? Yes, from here I should subtract how much? 70,000 or 1 lakh? 1 lakh. Whatever is sitting in my P&L account, that is disturbing me. 70,000 is not disturbing me. 1 lakh is disturbing me. Correct. Vaibhavi, Deepa, very nice. Kishore, correct. So whatever is disturbing my P&L account, 70,000 I can't see. 1 lakh is disturbing my P&L account. So I have to. This is my step number 3. This is rent received. 1 lakh. I will subtract. The next income is, the next income is salary from the partnership firm. They are given here. Arjun is also a partner. Arjun is also a partner in a partnership firm and received a salary of 2 lakh. Okay, guys. Leaves few lines. Write one more concept regarding the partnership remuneration. Leave few lines, not more than 4 or 5 lines. That's it. Remuneration to partners. Remuneration to partners. Is remuneration to partners from the partnership firm. From partnership firm. This remuneration, please divide this into 2 parts. One is interest from their capital. Second is other remuneration. Other remuneration can be salary to partner, bonus to partner, commission to partner, etc. If I talk about interest on the capital, it is a PGBP income of the partner. It's a PGBP income of the partner. It's a PGBP of partner. In fact, all partners, whether they are working, whether they are non-working. It's a PGBP of the income of the partner. How much? Actual interest received or 12% per annum. Whichever is lower is the PGBP income of the partner. Actual interest received or 12% per annum. Mostly 12% per annum, you should remember. It's a PGBP income of the partner. PGBP income of the partner. What does it mean? Please write this example. Example. Mr. X is a partner in some partnership firm. And let's say X has his own business also. X has his own business also. And this is the P&L account. It's an individual P&L account, right? Individual P&L account of the partner. So if it is written if it is written here that he has received interest on capital from partnership firm where he's a partner. Let's say he has received 26,000 and which is given that it is 13% per annum. It is 13% per annum if it is given. So is it a PGBP? Interest on capital is the PGBP income of the partner? Yes, because we understand that interest on their capital is the PGBP income of the partner. Whether he is a working partner, non-working partner does not matter. It's a PGBP income, but how much? How much is the PGBP income? The actual interest 26,000 or 12%. Yes, can you calculate 12% for this? Yes. This is equal to 13%. This is equal to 13%. So how much is equal to 12%? I believe that everybody will be able to understand 24,000. Say yes or no. See, if 26,000 is equal to 13%, 13 into 12, so you will get 24,000. Everybody got it 24,000? So in this case, his PGBP income would be only 24,000. So actually in his P&L account, it is sitting 26,000, but his PGBP income should be 24,000 only. So 2,000 he is showing extra. So just delete that. So here, rupees 2,000 extra shall be subtracted while computing PGBP. While computing his PGBP, Mr. X. Because up till 12%, it is your PGBP, but if it is more than 12%, it is not PGBP. So let's say if I would have written it 12%, then we are okay with it. 26,000, I'll not do anything because this is PGBP. If it is 11%, if it is 10%, we are okay with it. But as soon as it will go more than 12%, we are not okay with that excess. So that excess is not our PGBP income. Why? It is not our PGBP income because it is added in the profits of the firm. Firm will pay tax on it. Partner will not pay tax on it. So any excess over it, firm will pay. We will not pay. Have you written this? And also understood it or not? Correct. Let us come to other remuneration. Other remuneration when the partner receives. Here I'll make two baby P&L account. This is the P&L account of partner who is a working partner. And this is the P&L account of a non-working partner. Their individual P&L account. So here if I see on this credit side, here if I see by any of these remuneration, salary, bonus, commission, etc. Let's say salary from firm. Here also I'm seeing salary from firm. This is a PGBP income of the partner. If partner is working, it's a PGBP income of the partner because it is allowed to the partnership firm also. So I'm not going into that right now. So it is a PGBP income of the partner. You can correctly write it over here. But if it's a non-working partner, if it is given to you, if nothing is given, please always assume as a working partner, or if you want, you can write an assumption. It is assumed that he's a working partner. But if it is given that he is a non-working partner and there is some salary which is given, it is not an income. It is not an income. Neither PGBP nor any other income of the partner. It is not an income of the partner. Why? Because on this, partnership firm pays tax. Partner will not pay tax on this. So it is not an income. So if now it depends on the credit side if there is any remuneration. So if it's a working partner, you are okay with this remuneration. If it's a non-working partner, please delete it. Why? It is not PGBP. And in fact, it is neither taxable in the hands of the partner, because on this, partnership firm pays tax. Have you done it? Very good. Now, when I see in this question, it is written that Arjun is also a partner in a partnership firm. They have not mentioned that whether he is working or non-working. Arjun is also a partner in a partnership firm and received a salary of 2 lakh, which is credited here, and he has credited over here. Guys, what do you think? Are we okay with it or we are not okay with it? Please tell me your answer. We are okay with it or we are not okay with it? Are we okay or not okay? Pradeep is saying I'm okay with it. Gomti is also saying we are okay with it. Since nothing is given, so we'll assume that he's a working partner. And if he's a working partner, then we know that if any salary which he received from the partnership firm is a PGBP. So we are completely okay with it, right? In case the partner is not showing it over here, but in the information you will find it, please make it your PGBP. Please make it your PGBP because that is PGBP. So here the partner has already made it PGBP, so we'll not do anything. If he would not have written it over here, but in the information it is given that he is also a partner in a partnership firm and received 2 lakh rupees, which is not recorded, please record it. Please add it because that is your PGBP. I believe everybody got it. Deepa, have you understood? Do you want me to explain again? Good. So we are okay with it. Okay. Guys, now step 1, net profit. Step 2, expenses. Step 3, income. We have done. Now let us see the information, if any information is left. So one is WDV of the asset. Computers 240, computer printer 150. You understand, computer SSDs are chargeable at a rate of 40% depreciation. And simply, there is no addition, there is no sale. Simply will compute depreciation on 240 plus 150, that is 390. So now we are doing information. So we'll subtract this depreciation, correct? Less. Depreciation under section 32, 3,90,000 into 40%, 1,56,000. Okay. Correct. And any other information which is missing? Information number 2, we have done that the following income are credited. We have taken them. Non-competing fees. Guys, what is non-competing fees? This is a PGBP income. Non-competing fees is a PGBP income, and the assessee has not recorded it. So we will record this. See, non-competing fees of 1.5 lakh is received during the year and not credited to the P&L account. So is this a PGBP income? Yes. Specifically written in charging section 28 that this is a PGBP income. So please record it 1.5 lakh because it is not credited in P&L account. We should credit it. So it is should be add non-competing fees. $1.5 lakh. That's it. Information is over. So my PGBP would be 716,500. Correct. Kishore, Aditya, Shagna. Correct. 7,16,500. Now we have no other income. So this is GTI. Minus deductions under chapter 6A. So right now we don't have it. So my total income comes to 786,500. Correct. Correct, Shagna. I believe you have done this. Question number 3. It says, Praveen Kumar has furnished the following particulars relating to payment made towards scientific research. There, he has made a payment towards scientific research. Payment to this. Okay. Compute the amount of deduction available under section 35 under both the regimes. So we have to compute the deduction under scientific research. So we understand that for scientific research, in-house research is allowed under both regimes, and outside research is allowed only under only under optional, but not under default regime. So he has made certain payments. So let us see what is outside, what is not. So I'm directly doing it. So everybody please do it with me. Solution number 3. So in this question, we are supposed to calculate the amount of deduction allowable under section 35, scientific research. Deduction allowed under section 35. So this is optional regime and this is a default regime. Outside research, and if there is any in-house research also. Payment to K Research Limited. It's an outside research. Everybody agree it's an outside research. Whatever we will incur for ourselves, that is in-house. Otherwise, it's an outside research. Then payment to LMN College. This is also outside research. Payment to OPQ College. This is also outside research. Is outside research is allowed provided the payment which we are making should be an approved institution. If it is an unapproved, we will not allow it. So it is mentioned that K Research Limited and LMN College are approved. Okay. K Research and LMN are approved, and these payments are to be used for the purpose of scientific research. So they have specifically mentioned that out of these 3, 2 were approved. So it means that they are not saying anything about OPQ, and they are specifically telling about these 2 other institutions that is approved. So it means OPQ is not approved. Unapproved, correct. So we will not allow for OPQ. In optional also, if it is unapproved, we will not allow it. Okay. Payment made to National Laboratory. See, National Laboratory or IIT are anyways every time approved. So this is also an outside research and approved. So he has made 4 outside research, one of which is not approved. Machinery purchase for in-house research. For in-house research, the name itself is suggesting it is in-house. Anyways, whenever we purchase a machinery, etc., so that is an in-house research. So this is in-house. Salaries to research staff engaged in in-house research. Again, it is an in-house research. So we have this much as in-house research. It will be allowed under both the regimes. But outside research will only be allowed under optional regime. So not that a difficult question. I'm doing it right now. So we have paid to K Research Limited, K Research, LMN College, OPQ College, it is unapproved. Then to National Laboratory. And we understand 100% reduction is allowed. So 2015 and 8. I believe 43 lakh. But in default regime, I will not get it. In default regime, I will not get it. Then we have also paid for in-house research. Machinery purchase and salary. And we all know that 100% reduction is allowed except land on capital expenditure also. So machinery purchased is for 25 and 12 for this. And we will get in both the regimes. The total deduction comes to 80 lakh, correct? 80 lakh here and 37 lakh here. This is deduction under section 35. So this is the scientific research deduction, which is allowed only in outside research, is only in optional, but not in default. In-house is in both. In-house research, 100% for revenue expenses also, 100% for capital expenses also, except land. See, in-house research, if we have purchased land, in land, whenever you purchase land under any of the provision of Income Tax Act, you will not get deduction. You will not get depreciation on land. You will not get any deduction. 35 AD, we will see, you will not get any deduction on land. Let's say the examiner confuse you. He says that we have done an outside research. We are following optional regime. Okay. We have made the payment to IIT. Correct. And with this money, IIT has purchased land. So is it allowed? Yes. We have not purchased land, right? That is an outside research. Outside research is a donation, contribution. So how they are using for their scientific research purpose, that's their problem. It's not our problem. Correct? So see, whenever the assessee is purchasing land, then deduction is not allowed. So if somebody else is purchasing land, so we are not concerned with it, that how he is using my money in scientific research. He is using for scientific research. How he is using, that is his problem. Correct? Sometimes examiner try to confuse you that the person to whom we have made the payment, the association to whom we have made the payment outside research, they have purchased land. So it's their problem, not our problem. Correct? For us, it's a donation. So for us, it is neither a capital expenditure or a revenue expenses. For us, it's a donation. Okay. Let us take a quick break of 5-7 minutes and we'll back at let's take a break of 7-8 minutes and we'll back at 9:03. I think you guys are back. Okay. See, there is a section 35 AD, that is for specified businesses. Please keep on writing with me. That is for specified businesses. And it has some 14 businesses. It has some 14 businesses. Example, like warehousing for agriculture produce, cold storage facility, 2-star or above hotel, hundred beds plus hospitals, etc. So you must be knowing it. There is a list of, you don't have to remember those lists, guys. You don't have to remember those lists. You don't have to learn it. Just read it. In fact, twice or thrice, that's more than enough. So you might be having the handbook also. So from that handbook or from wherever you have read it before, you can read it, those lists. It's a 14 type of businesses. Just read it twice or thrice. That's enough. So for these businesses, under section 35 AD, if the assessee follows optional regime, it is only under optional regime. So he gets 100% deduction of capital expenditure. He gets 100% deduction of this capital expenditure. What do we mean by capital expenditure? Let's say he has spent something on land. No, not on land. He has spent something on building. He has spent something on plant machinery. He has spent something on furniture. He will get 100% deduction, except land, goodwill, or financial instruments. So except these three capital expenditure, he will get 100% deduction. That is under optional regime. That is a little bit important section, but not that important regarding it. But if I tell you, the thing which is important from here is that if you have claimed 100% deduction, if 100% deduction is claimed on any asset, then there is a lock-in period of 8 years. This is important. From examination point of view, this is important, that there is a lock-in period of 8 years. It means that before 8 years, you cannot transfer this asset into another non-specified business. What does it mean? Have you written till here, everyone? Good. It means, let's say, the assessee has one specified business, another non-specified business. For example, assessee has one specified business and let's say other non-specified business. Keep on writing. For example, he has a business of specified businesses, manufacture of fertilizers. Fertilizer is one of them. Manufacture of fertilizers. It's a specified business. He also has any other business which is not specified, which is not of 14 businesses. It is another business. Let's say it is manufacturing of clothes. For example, in previous year, 22-23, he has purchased a machine. For example, rupees 25 lakh. He has purchased a machine for rupees 25 lakh for a specified business. So there is a lock-in period of 8 years that now for next 8 years, you cannot transfer this into another non-specified business. And if you transfer after 8 years, then there is no problem. But if you transfer before 8 years, then there is a problem. So let's say, for example, this person has purchased a machine for rupees 25 lakh in 22-23, some 2 years back. So what will happen is, he will claim 100% deduction under section 35 AD. How much? 25 lakh, he will claim 100% deduction. And 100% deduction he will get. 100% he can debit. He got this facility. Okay. Now what happens is, he is transferring this into this normal business. Let's say transfer in previous year, 24-25. It is transferred just after 2 years. So he has purchased it in 22-23. 22-23 he has used it. 23-24 he has used it. But in 24-25, in the third year, he has transferred this into normal business. So you have actually broken your promise. You break your promise. So in this case, if you have not fulfilling your promise, before 8 years you are transferring it. So in the year of transfer, what will happen? In the year of transfer, we will withdraw this deduction. In the year of transfer, this is before 8 years, we will withdraw your deduction. And we will make it your PGBP income. Because earlier you have claimed a deduction. Now you are not entitled to claim the deduction because you have not fulfilled your promise of 8 years. So we will, whatever the deduction we have given it to you, we will make it your PGBP income. So how much would be the PGBP income? So the PGBP would be deduction claimed, deduction under 35 AD, whatever he has claimed. So it would be 25 lakh will become your income. But now the important point is, now this person says, okay, sir, you have given me deduction of 25 lakh. Now you are taking it back. You are making it my income. But now, sir, please tell me, this assessee is saying, sir, if I would have used it in my manufacturing business from this very date, at least I would have got the depreciation. In the previous year, 22-23, in previous year, 23-24, I have not claimed any depreciation on it. Why? Because I have claimed a 35 AD. So actually, sir, I am losing my depreciation. I am losing my depreciation of these 2 years. At least give me the advantage of the depreciation. So although I have not claimed it, but give me the advantage of deemed depreciation also. So I understand you are taking 35 AD back, but at least give me my 32 back also, right? So the 2 years depreciation, I need it back. So what you are saying, you are saying 25 lakh, make it your income. Okay, make it, but give me these expenses also. So whatever is the depreciation, let's say 25 lakh is the amount which we are taking it back. And let's say depreciation comes out to be 6 lakh, for example. So he says, okay, sir, take your 25 lakh back, but give me the deduction of this 6 lakh also. So if we do the net amount, so you can take only 19 lakh rupees back from us. So 25, you are making it your income. Please give me 6 lakh rupees deduction. Also 6 lakh is the random amount I have calculated. This 6 lakh, please give me back. So if you want to make my income, just do the net amount of this 19 lakh. Everybody understood this or not? Everybody understood it or not? Why? Because it is transferred in 24-25. So actually he lost these 2 years depreciation and now he is asking it back. So what we should do it? We will do the net amount. We should do the net amount. 25 lakh, you take it back. Okay. But give me the 2 years deemed depreciation. So how will it give it? Write it. PGBP deduction under section 3580, 25 lakh will make, but minus, will subtract the deemed depreciation. Deemed depreciation. How much is the deemed depreciation for these 2 years? So this is for 22-23. So deemed depreciation would be, first of all, tell me, have you made it till here? Have you written it till here? Okay, good. Very good. Now, the deemed depreciation would be, first of all, for this year, 22-23. So previous year, 22-23. How much? 15%. Let's say it's a machine. So whatever is the rate, we'll charge that. Let's say 15%. So 15% of 25 lakh. 3,75,000 is the deemed depreciation he would be asking. And please remember, see, 35 AD is available under optional regime. So it means that this person would be following optional regime in this year. Agree? Now, also very, very important thing which you should not miss is, let's say it's a machine. It's a machine, not for building, not for anything else. It's a machine. And right now he is a manufacturing concern. So he would have said, sir, I would have used this machine in my manufacturing business, in my factory. So I need additional depreciation also, which I am missing. So this is also, please understand that what business the other business is, what type of business the other business is. So if this business is a normal business, not a manufacturing business, then claim only deemed depreciation should be only the normal depreciation. But if that other business is a manufacturing business, and it's a case of plant and machinery, so he would ask for additional depreciation also. So here, since it's a manufacturing concern, so every time it's not there not be additional depreciation, but only on those cases, if that other business is a manufacturing business, so we will claim additional depreciation also. Since why? Because we are following optional regime. Because 3580 was, we are following in that year, it is already allowed in optional regime. So it means that we are following optional regime. So we have to claim additional depreciation also. And how much is the additional depreciation? 20% of actual cost, 25 lakh. So 5 lakh he would be asking for the depreciation. The total depreciation which he would be asking is, correct Deepa, 8,75,000. 8,75,000 is the depreciation which he would be asking for this year. Then he would be asking for the depreciation for previous year, 23-24 also. Correct. So 23-24, because in 24-25 we have transferred it. That's okay. But for the last 2 years where I have lost my depreciation, so 15% off. Now how much amount? Written down value. Guys, how much depreciation we have claimed till now? 875. So the value would be 25 lakh minus 8.75. Understood? Because second year we will claim on the depreciated value. So 25 lakh into 8 minus 8,50,000 on 1650. Oh, yes. On 1625. On 1625, correct. On 1625, 15%. So this is 2,43,750. Correct, Deepa. Very good. So this is 2,43,750. Very nice. So these are the depreciation which I am missing. So the total depreciation which this person is missing is 375, 5 lakh and 243, he would require this depreciation. So he will say, okay, sir, 25 lakh you want to make my income? Okay, but give me this depreciation. So the net amount would be so 11 lakh 18,750 is the depreciation which he is asking. 11 lakh 18,750 is the depreciation which he is asking. This is an important question, guys. 13 lakh 81,250 is the PGBP income. And this will make in previous year 24-25, where we have transferred this asset before 8 years. Everybody done? Good. Good. So question number 4 is actually quite similar to it. So since I have already discussed, so I'm not discussing it now. Question number 4, the example which I have given it to you, almost similar to this. So you can do this question number 4 at your homework. Okay. Right, one more important concept. Cash payment. Cash payment in excess of rupees 10,000. So whenever you make a cash payment in a single day to a single party in excess of 10,000, when I say cash payment, I also include bearer check or cross check. So I can say through non-specified modes, non-prescribed modes. Through non-prescribed modes. If you make a payment, cash payment to a single party in a single day, to a single party in a single day. So we understand it is not allowed, right? So it is divided into two parts. Whether it is a revenue for the revenue expense which you have made the payment, or you have made the payment for the capital expense. What is capital expense? Let's say you have purchased a machine. It's a capital expense, but you have paid in cash. So it will go here. You have paid a salary in cash here. Correct? Furniture in cash, building in cash here. Other revenue expenses, purchases, salary, printing and stationery, any other expense in cash here. Revenue expenses. So if you pay revenue expenses in cash, so there is a section 40A3, which will disallow. So which will disallow your expenses. It says that payment, or I can say cash payment more than 10,000 is fully disallowed. Is fully disallowed. Correct? Is fully disallowed. However, in 48.3, there are certain exceptions. In 48.3, there are certain exceptions. One of the exception is that you can pay to the goods transporter up till rupees 35,000. You might be knowing it. Guys, it is for the revenue expense, not for the capital expense. I am writing this exception here. To the goods transporter, you can make the payment of 35,000. It is written in the exception of 48.3. There are some other exceptions also. Other exceptions also. Like if you are purchasing any agriculture produce and you are making a payment to the cultivator actually who has produced it. So let's say it's a hotel and they are making a payment to a vegetable vendor. It is not allowed. Why? Because they are making a payment not to the cultivator, not to the farmer. They are making a payment to vegetable vendor. That is not allowed. But if you are making a payment to a farmer, cultivator, grower, then it is allowed. So there are other exceptions also. If you purchase anything which is made without electricity, without the aid of power, then you can make the payment. If you are making a payment to any particular person who resides in such a place, who actually lives in such a place, or he is doing his business in such a place where there is no banking facility, then you can make the payment. So we have seen that there are certain other exceptions also. These are 48.3. Important, guys, for capital expenses. If you make a payment for capital expenses, example, if you have purchased a machine for rupees 1 lakh, if you have purchased, keep on writing this. If you have purchased a machine for rupees 1 lakh, and let's say through banking mode, you have made a payment of 60,000, and through cash, you have made a payment of 40,000. Total 1 lakh you have paid. But through banking mode, you have made a payment of 60,000, and through cash, you have made a payment of 40,000. Guys, so your actual cost of asset, since this is made for more than 10,000, so your actual cost of the asset would be rupees 60,000 only. It would be rupees 60,000 only. Why? Because this amount is actually more than 10,000. This amount was actually more than 10,000. So we will not allow it as an actual cost. So my actual cost would be 60,000 only. So whenever you would be claiming depreciation, let's say you are writing additions during the year. So you have purchased a machine of 1 lakh, but 40,000 you have paid in non-prescribed mode, cash mode, bearer check or cross check. So whenever you will be writing additions during the year, you can't write 1 lakh over there. Your actual cost would be 60,000. So depreciation would be on rupees 60,000 only. Or any reduction. In fact, actual cost would be this. So let's say depreciation you are claiming, or you are claiming capital expenditure on scientific research. Let's say it's a scientific research asset. You have purchased 1 lakh, 40,000 you have paid in cash. So for 35 scientific research, for 35 AD, we say that 100% of the capital expenditure. But your capital expenditure, etc., will be considered as 60,000 only. So you can claim your depreciation on 60. You can claim your scientific research on 60. You cannot claim on 1 lakh. No. And 35 AD on 60. And guys, there are exceptions of more than 10,000 that is only related to revenue payment, right? Here there is no exception. Here there is no exceptions. It means that it should not be more than 10,000. See, if I say that through banking mode I have paid 90 and through cash mode I have paid 10,000. So here up till 10,000 is allowed. So you can take your actual cost as 1 lakh. Now there is no problem. Because it was up till 10,000, let's say. Then there is no problem. 10,000 or less, then there is no problem. The problem is when it is more than 10,000. So then you will not consider it. And there is no exception to it. What does it mean? Now examiner tells you. Examiner tells you that Mr. A has purchased a machine of rupees 1,20,000. Mr. A purchased a machine of 120. He has incurred installation rupees 30,000. And he has paid for the transportation of this machine. rupees 12,000, and it is paid in cash, and we have paid to the goods transporter, to the truck driver we have paid. Okay. This transportation, I'm writing it fully, transportation. Transportation of machine is 12,000. Now we understand we have paid to the goods transporter, but what it is for? It is for capital expenses. You understand first of all that whatever is my purchase price plus installation plus transportation, etc., forms part of my actual cost of the machine. These all three are my capital expenditure. So 120 is paid, nothing is given, so we'll assume that it is paid in through banking mode. Installation expenses is paid through banking mode. That there is also we don't have any issues. We have issue with this. So now examiner will confuse you because we have in our mind that 35,000 is paid to the transporter. We are okay with it. Yes, we are okay with it had it been a revenue expenses. If it's a capital expenses, we are not okay with it. So with this, we are not okay. So your actual cost will become 150, 120 plus 30, and not 162. 162 will not make it. We'll make 150 only. Because this exception of 35,000 is only related to revenue expenses, not for capital expenses. Have you done it or not? Understood or not? Now, I have told you that these expenses, these cash payment are either for revenue or capital. More than 10,000 is not allowed. Because let's say if you are making up, if you are actually paying something, but that payment is neither your revenue nor your capital, neither your revenue nor your capital expenses, so that you can pay in cash. So that is not a problem. Let's say you're depositing some money in your bank account. That is not a problem because that is neither your revenue expenses nor your capital expenses. One of the favorite questions of the examiner is, you are repaying the loan. If you are repaying the loan, see, repayment of the loan is the repayment of liability. It is not your revenue expenses. It is not your capital expenses, right? What is revenue or capital expenses? Which is actually your expense, which you are paying something extra. So if you are repaying the loan, the money you have taken it as a loan, the same money you are repaying it back. So it is not revenue, it is not capital. So there is no problem with it. But yes, if you are repaying the interest, interest is your expense. So on interest, we will check this 10,000. So please write a note. Note. Repayment of loan is neither revenue nor capital expense. Therefore, payment in cash, we are okay with it. Allowed, no issues. Correct? Good. See, look at this question. Question number 6. Shahid, a wholesale supplier of dyes, provides you with the details of the following cash payment made throughout the year. Okay. So he has made 1, 2, 3, 4 types of payment. What will be the disallowance under 40A3, if any? So they are asking that if there is any cash payment more than 10,000, whether it will be disallowed or not. So first, on 12/6/24, he has made a payment. Loan repayment of 27,000 taken for the business purpose from his friend Kunal. The repayment also includes interest of 5,000. Tell me, he has paid a loan of 27,000 rupees. That includes 5,000 rupees as interest also. Okay. So 22,000 is the loan repayment and 5,000 is the interest. They are made in cash. What do you think? How much is disallowed? Guys, everybody tell me how much is disallowed out of it. Is there anything which will be disallowed, or 5,000 will be disallowed, 22,000 will be disallowed, or no disallowance? Very good. So there is no disallowance because repayment of the loan is not actually my expense, and 5,000 is an expense. If this would have been more than exactly 10,000, we are okay with it. But if it is more than 10,000, let's say it is 11,000, then we will disallow entire 11,000. But here there is no disallowance. Okay. Portable machinery purchase for 15,000. We have purchased a machine for 15,000 and the payment is made in cash in 3 weekly installments. So we are making in 3 weekly installments 5,000, 5,000, 5,000 in 3 weeks. Guys, is it okay or not? Are we making a payment on a single day? No, we are not making a payment in a single day. So we are making payment on different days. So we are okay with it. No problem with it. Payment of 10,000 made to an electrician due to unforeseen electric circuit at shop. Okay. So there was some repair thing or any other electricity problem was there. And we have made 10,000 rupees payment to the electrician in cash. Are we okay with it or we are not okay? It's a revenue expense. Yes. But since the payment is not more than 10,000, since the payment is not more than 10,000 in this case, so we are okay with it. So as of now, nothing will be disallowed. If this would have been 10,100, then I am not okay with it. So it is 10,000, so we are okay. Now, on 28th February, purchases made from a registered dealer, 13,500. We have made a purchases 13,500. What do you think? Disallowed. It is registered, unregistered, doesn't matter over here. But the payment which we have made is for revenue expenses and it is 13,500. So it will be disallowed. So out of this, only this is 13,500. This is the correct answer. 13,500 will be disallowed. Got it? So you should be clear on this section that what is the cash payment. Okay, let's come to question number 7. Okay, for question number 7, I have to explain you MSME. Quickly, guys. Regarding MSME, payment to micro, small, medium enterprises. Payment to MSME. This is also one of the portion, one of the out of 7. This was the last expense which is allowed, which is covered under section 43B. And we have a special provision on it on MSME. So whenever we make a payment to MSME, MSME is a small businesses. MSME is a small businesses. So let's say if somebody is making a payment to MSME, guys, it is not a this year amendment, it is last year amendment. This was amended last year. And why it has been included in 43B? Because government would like to protect the interest of MSME. These are small businesses. And guys, small businesses have very, very little fund, right? So if they will, let's say they have 5 lakh, 10 lakh, 20 lakh, 25 lakh, that's it. So if they will be giving all their goods on credit, and let's say if the credit period is too high, too long, or that person is who has actually purchased goods from them, they are not making a timely payment. They are not making a timely payment. So this MSME, because it's a very small business, they have limited resources, they have limited cash, they have limited capital. And if they will not get the money in time, so they will be in a deep financial crisis. Agree now? So they will not be able to manage their debtors. So if the debtors will not pay them timely, then they will not be getting the money for their working capital. So they will not be able to survive. After a few years, they will die actually. So government would like to protect the interest of MSME. They would like to save this MSME. They would like to give security to them. So that is the reason they included this particular point in 43B. They included this particular point in 43B. They said that any person who is doing a transaction with MSME, please make them payment as quickly as possible. Please make them payment as quickly as possible. If you will not make the payment as quickly as possible, we will not allow that expense for you. So let's say there is a big company. For example, there is a big company. Let's say there is a Reliance Limited. Very, very big company. And let's say they are doing a transaction with a small business. They can actually purchasing some goods, etc. from a small business. This is MSME. So today, now, because Reliance might not be paying in time, and this MSME would not be able to do anything because why? He's actually having a transaction with Reliance. So obviously Reliance has an upper hand. Reliance will control all these transactions. So they might delay the payment. So they might delay the payment to MSME. So 43B, it is inserted over there that Reliance, whenever you have purchased some goods or you have actually incurred some expenses and you are supposed to make any type of payment, not only purchase, guys, it could be any payment. Any payment you have to make to MSME. We understand it's your business expense. It will be allowed only and only if you have made the payment quickly. So if you want to make a payment, it will be allowed if you make a quick payment. What is a quick payment? I'll explain. So Reliance, if you are making a quick payment to MSME, then it is allowed. Then it is allowed in the year to which this expense belongs. That means it is allowed on due basis. What is due basis? Whenever you have made a purchase, in that year it will be allowed. If you have made the payment quickly. If you make the payment quickly. This is a quick payment. But if you don't make a quick payment, we'll call it a late payment. If it's a late payment, then we will not allow on due basis. Not on due basis. Then it will be allowed on only on actual payment basis. It will be allowed on actual payment basis. So I can also write it like this, that if you make the late payment, then it will not be allowed on due basis. So in the due year, it will not be allowed, but it will be allowed in the payment year. Only on actual payment. So it will be allowed in the payment year. First of all, tell me, have you written this? Let's say, example, let's say this is a P&L account of Reliance. It's a P&L account of Reliance Limited. And they have done some purchases. For example, they have done some purchases. This is previous year, 24-25, right? This year, we have incurred these expenses. This is due basis. So in previous year, 24-25, we have done a purchases from MSME, and we have also done some MSME 1, and we have done some other purchases from MSME 2. Let's say of rupees 4 lakh. This is 5 lakh. Right? And we have made this payment in previous year, 25-26. Next year we have made the payment. This also we have made the payment in previous year 25-26. So what is this case? These are the expenses of this year and we are making a payment, let's say next year. Have you written till here also? Although in both the cases, we have made the payment in next year. But let's say the first payment, although it was made in next year, but let's say it comes under the quick payment. It comes under quick payment. For example, let's say we have purchased something on 31st March 25. So this year I have shown it 4 lakh. This, and I have made the payment on 2nd April. After just 1 or 2 days, I make the payment. But the 2nd April 25, we have paid the payment in this year. So the year of accrual and the year of payment are different. But let's say it is a quick payment. I'll tell you guys what is a quick payment. But let's say it's a quick payment, then it will be allowed in this year itself. Then we have no issues. It will be allowed in. If it's a quick payment, look at this. If it's a quick payment, allowed on due basis. So it will be allowed in, if it's a quick payment, it will be allowed in previous year 24-25 only on due basis. On due basis. If it's a quick payment, then we will, although the payment year is this, but the due year is this, and in case it's a quick payment, then we are okay with it. 4 lakh, we will allow it. However, in case we have made the payment next year, and let's say it's not a quick payment, it's a late payment. For example, it's a late payment. Then it will not be allowed in due basis. So in this case, due year was 24-25. Payment year was 25-26. So in this case, it will not allowed in this year and it will be allowed in this year. So as of now, we are more concerned with not allowed. So I will not allow this in this year. In this year, it will not be allowed. So it will be allowed only on payment basis. In the payment year, it will be allowed. In due year, it will not be allowed. Have you done this also? Now let us understand after this that what do I mean by quick payment and what do I mean by late payment? So what do we mean by quick payment? See, let's say there is a transaction between Reliance and MSME. So there is a transaction between Reliance and MSME. MSME has told something. Reliance is now required to pay it. Correct. Reliance is required to pay this amount. So if Reliance is required to pay this amount, we'll ask that whether there is a written agreement between both of you or not. Whether there is a written agreement between Reliance and MSME or not. The answer could be yes, the answer could be no. Let's say the answer is yes. So if there is a written agreement, if the payment is made as per the written agreement, then we will say it's a quick payment. And if the payment is made after the date which is mentioned in the written agreement, it's a late payment. So let's say in the written agreement, it is mentioned that we will be paying in 30 days. So even if we are paying in 30 days, let's say in next year also, but it is within 30 days, then it's a quick payment. Correct? So let's say on 30th of March 25, we have purchased something. So this is previous year 24-25. This year expense, this year it got due. And there is a written agreement. And as per the written agreement, it is written that within 30 days we should make the payment. Okay. And if Reliance has paid the payment, let's say on 20th April 25, although the payment year is 20th April 25, the payment year is 25-26. The due year was 24-25, different. But the payment is made on 20th April. That is within 30 days. Within 30 days of making this purchase. So it's a quick payment, and quick payment will be allowed in this year itself. Please write, what is a quick payment? What is a quick payment? So we'll ask that if there is a written agreement, if there is a written agreement between you two, if the payment is made as per the agreement, if the payment is made as per agreement, it is a quick payment. But if you make the payment late, let's say in the agreement it is written 30 days, but if you make the payment on 31st day, 32nd day, 33rd day, but whatever, then it will not be allowed in the due year. It will be allowed in the payment year then. Whenever you will make the payment, it will be allowed then. Now, what is a quick payment? So if there is a written agreement, so if you make the payment as per the agreement, it's a quick payment. If you make the payment beyond that, it's a late payment. Okay. In late payment year. Now, guys, there are high chances. There are high chances because there is a transaction between Reliance and MSME. So there are high chances that Reliance would be controlling this transaction. Say yes or no, because Reliance is more powerful. Reliance will control this transaction. Reliance will control this written agreement also. Yes, no? Agree? So he's more powerful. This is a small business. MSME is a small business. Reliance is more powerful. So Reliance would be controlling this transaction. Yes or no? Everybody agree with me? So who will control this? Let's say we are a small business. We are doing a transaction with Reliance. So who will control this transaction? Reliance will control. So in this case, agree now? In this case, so it is a high probability that in this written agreement, Reliance will write that we will pay you in 300 days, 400 days, 1000 days. Guys, if this person will receive this money in 100 days, 200 days, 300 days, then altogether the purpose of this section will be defeated. Why? Because what was the purpose of this section for MSME? That we want that MSME should get their money as quickly as possible so that they should not feel the burden of financial crunch. So they should not go into bankruptcy. So that was the main thing. And because we know that there are big players like Reliance or other players, they will make the written agreement as per their choice. They will not write 30 days, 32 days over here. Rather, they will write 100 days, 200 days, 300 days. And they will say, sir, within 300 days, we have made the payment. It's a quick payment. So we were knowing it that people will do like this. So they have actually limited number of days in written agreement also. If you will write 30 days, 35 days, 40 days, 45 days, up till 45 days, we are okay. But if you write in your written agreement 50 days, 100 days, 200, 300, maximum we will take only 45 days. Maximum we will consider. So now today, whatever the number of days they will able to write it, they will not be able to make the payment. If they are making the payment after 45 days, it's a late payment. They can't say that, sir, it is as per the agreement. No. So if there is a written agreement, then you have to make as per the agreement, but maximum 45 days. After 45 days, it is be considered as a late payment. Understood? Understood? Now, Reliance is very smart. What will Reliance do? Reliance will say, okay. So if today I'll write more than 45 days, maximum 45 days will be considered. So Reliance is very smart. They will say, okay, let us not make the agreement. Let us not make the agreement. So there is no agreement. So in case there is no agreement, Reliance is very smart. They will not make any agreement. So if you will not make any agreement with then 15 days, 1-5, that's it. you have to make the payment within 15 days. If you make the payment within 15 days, it's a quick payment. If you make the payment on 16th day, it's a late payment. So if there is no agreement, then within 15 days, make the payment within 15 days. Got it? Everyone? Understood? Make the payment within 15 days. And guys, any payment which is made late, this is a quick payment. And if the payment is made after such date, that will be a late payment. That will be a late payment. And late payment will not be allowed on due basis. On due basis, it will not be allowed. It will be allowed in the payment year, not in this year. But here, if it's a quick payment will allowed in due basis. Everybody has written this? See, Anil started a business of manufacturing tables in February 2025. Okay, he has started a business. He follows mercantile system of accounting. Mercantile system means due basis. He purchased wood from A, B, and C. The details of purchase and payment as mentioned under. The day he has purchased it, the day he has made the payment. So he has purchased it from A, from B, and from C. This is C. And A is a micro, B is a small, and C is actually they are the sellers. C is a medium enterprises. So there is a person, Anil. Anil is supposed to make the payment to A, B, and C. And date of purchase is this date. Guys, can I say that this date belongs to, this is the due date, this date belongs to due year, previous year, 24-25. This is also previous year, 24-25. This is also previous year, 24-25. Everybody agree with this dates? He has made the payment in this year. 5 lakh, 7 lakh, 8 lakh. So what he would be showing is in his P&L account, this is previous year 24-25. He maintains his accounts on accrual basis. So he must be showing it that I have made a purchase of 5 lakh, 7 lakh, and 8 lakh. This is actually sitting in his P&L account in this year. All agree with me that 5, 7, and 8 would be sitting in his P&L account due year. Now, he has made the payment. Okay. Let me start with the last one. Payment due as per the written agreement, if any, within 40 days. Within 40 days from the date of purchase. So there was a written agreement, and in the written agreement, it was written 40 days. Guys, we are okay with 40 days. If this would have been 50 days, I would have taken 45 only. So anything which is more than 45, I will take 45. If it is less than 45, then we are okay with it. So you don't have to compute exactly the dates, just think it roughly. So 25th March, 40 days, somewhere in April or first week of May. He has made the payment. Date of payment was 30th November 25. The date of payment was 30th November 25. Guys, it's a quick payment or a late payment. It's a very, very late payment. Everybody agree? It's a late payment. Because we have purchased it on 25th March 25. The written agreement was 40 days. 40 days will somewhere expire in the month of May. But we have made the payment on 30th of November 25. So it's a late payment. So it will be allowed in the payment year. What is the payment year here? Just see. The payment year is 25-26. It will be allowed in the payment year. It's a late payment. So from his P&L account, I will disallow 8 lakh. Have you understood? I will disallow 8 lakh. Because it will be allowed in that year, not in this year. Okay. B. B, a small enterprise. 17th March. 17th March 2025, they have purchased something. There was no written agreement. There was no written agreement. Guys, within 15 days, so 17th March, within 15 days, almost 2nd, 3rd April, it will be 2nd, 3rd or 4th April, it will be 15 days. So let us see. The payment is made on 15/4/2025. Is it again late? Yes. It is after 15 days. If you will calculate it also, you will get almost, it is getting almost 1 month. So it will also be disallowed. And see in which year we have made the payment. The payment is made in this year. This date belongs to previous year, 25/26. So we have made the payment in 25/26. So it will be payment year. So 7 lakh will also be disallowed. Correct? Late payment. Payment year will allow. Okay. Next. A. We have made purchased on 15th of February 25. We have purchased on 15th February 25. And there was a written agreement 30 days. 30 days. 15th February, almost 30 days would be almost roughly 15th of March, 15th, 16th of March. He has made the payment on 29th March. Is it, first of all, tell me, is it on time, quick or late? First of all, tell me, is it quick or late? Within 30 days, we are supposed to make the payment. 30 days from 15th of February, if you will see, it will be around 15th of March or so, 15th, 16th of March. So everybody would agree it's a late payment. It's a late payment. Since it's a late payment, so it will not be allowed in the due year. In this year, it will not be allowed. Now it will be allowed in the payment year. It will be allowed in the payment year. Guys, what is the payment year? Can you tell me the previous year? What is the payment year? The payment year is actually, this date is falling in this year only. Previous year, 24/25. This is the payment date. Everybody agree? So although it's a late payment, but now it will not be allowed on due basis, it will be allowed on payment basis. But since the due year and the payment year is same, so we don't have any problem. So 5 lakh would be allowed. So 5 lakh would be allowed in this year. Since the due year and the payment year is same, so this will be allowed. So 7 and 8 would not be allowed. 5 lakh will be allowed. Everybody understood it? 5 lakh would be allowed. Okay. Quickly, I'll take some 15 minutes more. Section 44 AD. Presumptive income. Section 44 AD, presumptive income. Here, if the assessee is individual, HUF or partnership firm other than LLP, plus resident, this thing is not that important. The important thing is that if his turnover of the previous year is up to 2 crores, if the turnover of the previous year is up to 2 crores, then he is eligible to compute his income on presumptive basis. Then he is eligible to compute his income on presumptive basis. However, in some cases, if it is up to 3 crore also, if his turnover is up to 3 crore also in some cases, then he is also allowed, but 3 crore we will give only to those people whose cash turnover, whose cash turnover upon total turnover into 100 is not more than 5%. Otherwise, guys, we will give 2 crore to everybody. See, 2 crore, we will not see that how much is your cash turnover, how much is your banking turnover. But 2 crore, we can give it to all. If somebody will say, sir, my entire turnover is in cash, no problem. 2 crore, there is no limit. There is no other condition. So up till 2 crore, there is no other condition. This condition is for the people who are actually more than 2 crores up till 3 crores. This condition is for those people that whose turnover is more than 2 crores but up till 3 crores. Then the condition is that your cash turnover, out of the total turnover, your cash turnover is not more than 5%. Understood this much? So you are allowed. Guys, if your turnover is more than 3 crores, if anybody turnover is more than 3 crores, will straight away not eligible. More than 3 crore, if this person is saying, sir, my 100% turnover is through banking mode on also, we will say, no, you are not eligible. More than 3 crore is not eligible straight away. Up till 2 crore, everyone is eligible, provided you are individual HUF or partnership firm. But if it is between 2 to 3 crores, then we will see that how much is your cash turnover. Now, if you are eligible, then how much is the presumptive income? How much is the presumptive income? In case you are eligible, then how much? Either you are eligible by 2 crores or you are eligible by 3 crore. Doesn't matter. If you are eligible, then whatever there's a turnover which you have received through banking mode, turnover received through banking mode, very, very important, up to the due date of ROI, whatever you have received through banking mode, up to the due date of ROI, the PGBP income would be minimum 6% of such turnover. Guys, it's very important that you would have received through banking mode up to the due date of ROI on that amount. If you have received through banking mode, but after the due date of ROI, then it is not 6%. And 6% is minimum, you understand. Your PGBP income on presumptive, it is not tax, it is your income, PGBP income. It is 6% of such turnover. And remaining turnover can be in cash, remaining turnover can be any mode which is received after the due date. Your PGBP income would be 8% of such turnover, minimum. So let's say somebody's turnover is 1.8 crore. 1.8 crore, everybody is allowed. 2 crore, everybody is allowed. So 1.8 crore, let's say his entire turnover is through cash. So here he will not get. So here entire 1.8 crore into 8% is the PGBP, not tax, it's the PGBP income. Let's say there is a person who is having 2.6 crore as total turnover. So 2.6 crore, it is more than 2 crore. So first of all, why he is eligible? So he is eligible because his cash turnover is very, very less. Mostly it is banking turnover, right? So whatever his banking turnover is, let's say 2.55 is the banking turnover and 0.05 is the cash turnover. So in that case, 8% for this and 6% for this. Tell me, have you written this? Now, done? Good. Now, look at this question. The following assessees are carrying retail businesses. Determine whether they are eligible for presumptive income or not. We have to tell whether they are eligible or not. See, Mr. A, banking turnover is 60 lakh, cash turnover is 100 lakh, total turnover is 160. See, up till 2 crore, we have no issues. So he's eligible, yes. No issues. He's eligible, yes. B, 240, we will see. We will see because it is going more than 2 crores. C, 210, 290, we have to see. D, 3,10,000. 3 crores, 3.1 crore. So received through banking mode. Although entire turnover is banking mode, but it is more than 3 crores. So we will simply say no. Boss, you are not eligible. Now, what about B and C? B and C will see that how much is the total turnover? 240, 290. Out of this total turnover, how much is cash? So cash turnover is 40. So 40 upon 240 into 100. If it is up till 5, then we are okay. If it is more than 5, then we are not okay. So 40 divided by 240, it is coming as 16.66%. We will say, no, boss, you are not eligible. You can't take presumptive scheme, go to the normal scheme. You can't take presumptive scheme. Here, your total turnover is 290. Out of this, cash turnover is 10 lakh only. So 10 lakh upon 290 into 100. 3.44%. 3.44% something. Correct. So this person is eligible. So this is not eligible. This is not eligible. Only A and C are eligible. And second thing is that if you are eligible, then how much is the presumptive income? Whatever is received through banking mode through due date. So here it would be 60 lakh into 6% and cash 100 lakh into 8%. This would be the presumptive income. And here 200 into 6% and 10 lakh into 8%. Everybody understood? Don't write it. If you want, you can take the screenshot of this. If you want, you can take the screenshot of this. So this is important. Guys, please also, I'm not able to discuss due to time constraint, but yes, please also look at your 44 ADA, that's notified professionals. So they are eligible if their turnover is up to 50 lakh, up till 50 lakh. And same thing, if it is above 50 lakh, up till 75 lakh, then we will see their cash turnover, that whatever is your cash gross receipts, if it is up till 5%, you are eligible. And the presumptive income is there 50%, right? Do you remember 44 ADA and 44 AE, that goods transport vehicle, 7,500 per month per vehicle, provided the total number of vehicles should not be more than 10, 7,500 per month per vehicle. And if it is a heavy goods vehicle, what is a heavy goods vehicle? Any vehicle which is more than 12,000 kg, it's a heavy goods vehicle. For that, the presumptive income is 1,000 per ton per vehicle. So let's say if there is a vehicle of 14,000 kg or 14 tons, 1 ton is equal to 1,000, right? So if there is a vehicle of 14 tons, so what is the presumptive income would be? For every ton, 1,000. So 14,000 per month is the presumptive income. If any vehicle is, let's say 22 tons, 22,000 means 22 tons, 22,000 kgs, that is 22 tons. So it would be for every ton 1,000 is the income. So 22,000 per month is the income. Let's say, for example, there is any vehicle which is 16.2 tons. In this case, every part of the ton shall be rounded off. So we will consider this as a 17 ton vehicle. So for every ton 1,000, 17,000 per month. Understood? So if any vehicle is there which is more than, see, if the vehicle weight is 12 tons or less, for every such vehicle it is 7,500 per month. But if the vehicle weight is more than 12,000 tons, more than 12,000 kg, that is more than 12 tons, then it is a heavy good vehicle. And if it is a part of the ton, it should be rounded off. Let's say there is 19.2 tons vehicle. Please consider this as 20 tons. Right? Every time compulsory to be rounded off. Part of the ton should be taken as full ton. Understood this or not? Last 5 minutes. Agriculture income. Everybody, agriculture income. A very, very important question from examination point of view, and you should know these percentages. I believe that you remember these percentages. So how much if agriculture, how much is business or non-agriculture? So if you are engaged in rubber business, if you are engaged in tea business, if you are engaged in coffee business, and guys, please remember that agriculture income from India, it is exempt, right? So this rubber business, tea business or coffee business is in India. For rubber business, majority percentage will go towards agriculture, right? Please remember this way, that majority percentages will go towards agriculture. So 65% over here and 35% towards business. So let's say if in your question the person is engaged in the manufacturing of rubber and he has 10 lakh rupees of income, so 65%, 6.5 lakh will be agriculture income, 3,50,000 of the business income. You should know these percentages. Majority percentages is towards agriculture. Tea business, it is 60% and 40%. For coffee business, it is if you are only growing coffee and curing coffee, it is 75% and 25%. And if you are doing some more process on coffee, you are growing, curing, roasted, grounded, then it is like tea, 60-40. You should know these percentages. Please remember that if there is any nursery business, nursery is plant business, nursery plants, 100% it is agriculture, it is not business. 100% is agriculture. So wherever you are doing doesn't matter. If it's a nursery business, 100% agriculture. And if it is rent received from agriculture land or building, so if you receive any rent, then also it is 100% agriculture. That rent is exempt, and 100% it is agriculture. Please remember these percentages. These are very important. Got it? These are very, very important percentages. I'm giving you the homework today. So I believe most of the concepts you are able to revise today. I'm giving the homework which is very, very important, and I would request you to please do these questions as homework. At least question number 12 and 13. You might find you have the solutions also available with you. Please look at the solution. Wherever you're stuck, look at the solution. And in case today, if I get time, I will also send you the explanation videos for this question. I'll send you the explanation videos so that you can also refer those videos itself. Probably today in the evening, I'll be able to do it. So if I get time, then definitely I'll be sending the explanation video for 12 and 13. I would highly recommend, please do these questions. It will actually give you a base for your total income questions. Correct? See you tomorrow at 7:30 a.m. Bye and take care. Bye-bye, guys. Take care.